Scott, what's happening? Steve, how's it
Hello.
going?
Hello. Happy Monday. Unusual Monday, but happy Monday nonetheless.
It is. It is a very unusual Monday. I think everybody out there knows what we're alluding to. And we're going to jump headlong into it in just a second here. But anyway, just wanted to take the time to thank everybody for popping in. Today is the first webinar or first office hours of February. January is a not so distant memory, an interesting month nonetheless, but here we are in February, and wow, the time's just flying by. So before we get into the meat here, I want to take a quick moment to make the lawyers happy and just want to make sure that everybody in attendance is aware of the fact that we are doing this for you guys, hosting these webinars for educational purposes only. If you need somebody to tell you when to buy, what to buy, how to do it, all that good stuff, please seek out a registered investment advisor or another licensed individual that can help you out with that type of activity. But for us, educational purposes only. All right, so before we get started here, from the polls, obviously most of you in here are already subscribers, but for the small amount of people that might be in here that are stepping into this webinar or, it could be their first Trade Ideas webinar. Just want to make sure you are aware of everything that we have going on out here in the community centered around the technology. We've got a trading room hosted by Barry Anderson with it's pushing 600-700 people these days. Now, Barry is a very accomplished trader, does a great job at using the technology and showing other people how he's interacting with the technology in the markets on a daily basis. So if you haven't been taking advantage of that resource, by all means, don't sell yourself short. And the best part about it, other than Barry, of course, is that it's free. You don't even have to be a Trade Ideas subscriber to get in there and benefit from the room. So that's how a lot of people get to know us in the first place before they become a subscriber. Now on the hourly webinars that we host Monday through Thursday, of course today's Monday, Steve and I do Mondays. Steve takes the helm on Tuesdays and does the trade of the week, and Andy rides shotgun with him. We change it up just a little bit, bring in Brad and Dan. Dan is the CEO of Trade Ideas, Brad is the CTO, so we like to change the flavor up a little bit. Those of you who attend know what I'm talking about. Andy rounds out the hourly webinars on Thursday with the Trading Studio, and I ride shotgun with him. And then, of course, because it's been such a big hit, we will continue to do Friday support session, which is every Friday from 11 a.m. to 2 p.m. Eastern. So it's a 3-hour, pretty much anything goes, with the exception of some of the higher functionalities. Anything Trade Ideas related is pop in there. We're there for a full 3 hours, myself, Andy, Steve, and Sean. So that wraps up the webinar schedule right there. Now, before we start showing screens and all the stuff that went on today, just kind of want to give everybody a little, overhead view here of course, as always, which is a little bit different than most market recaps. We're going to let Steve do his thing here. We're going to get into some other observations and some other things that were noticed today. We're going to talk about Holly and how she did, what she's been doing in the past, and Steve and I were both sitting here before the webinar began, talking about how her little idiosyncrasies of last week were kind of course, it's in hindsight, but when we see her doing certain things that are out of the norm, we have to be a little cautious, or at least having the gears turn in our head as to, okay, it's acting different. Could this be a sign? And of course, we'll get into some of the other tickers that were certainly very active today. So, Steve, I guess if you're ready, I'll pass it over to you, and we can look at the fiasco that unfolded in front of our eyes today.
Sure. And I was just responding to Kirk. We do not record the Friday tech sessions. It's 3 hours long. That's a giant video file, so we just try to make ourselves as available as possible. So let me show my screen here. Let me get all the silly stuff off, and yeah, a lot of red. Where I would like to start, was actually last Monday. So hopefully a good chunk of you guys were with us last Monday. and we started to show some outside days on inside days, excuse me, on the spies. I think we were right about here: Monday, Tuesday, Wednesday, Thursday. Or actually, it was hang on, Monday, Friday, Thursday, Wednesday, Tuesday, Monday. Okay, yeah. So this is what we had to go on last week as we were doing the market recap right here. So what I said was, inside day, I looked at all the different indices, and the inside price was the high and low was inside the prior day's high and low. We call those inside days. The real interesting thing, and I'm going to go back again a week, that I talked about, and hopefully some of you guys remember this, was I pointed out that even though the price action wasn't crazy that day, let's get our charts going here. This particular candle right here, if I can put an arrow on it, I will put.
Hey, Steve, I hate to interrupt, but I guess it's just me, but I didn't see the window pop up that shows your desktop. Huh.
Can anybody else see my desktop? Waleed sees it, and I've got the. Yeah,
I'm just gonna have
everybody else is seeing it.
Okay, I don't know.
Click on your GoToWebinar toolbar. Maybe it's being hidden by something.
Yeah, I did that. I'm just going to leave and come back in. So continue on.
Go ahead. Yeah,
I'll be back. Okay.
Trust me, I got a few things to say here. All right, guys. So I'm going to grab just a quick arrow just to kind of show you. The one thing that I did find interesting last week was this particular day right here. I'm going to highlight that with that green arrow, the green candle with that arrow. So what this was I said, if you guys recall, even though the price action of the spiders didn't roll over, we had an inside day, kind of just consolidating, no real threat. But what caught my attention was people started buying insurance, the fear factor, the fear index, the VIX. They started buying insurance, even though the price hadn't dipped yet. I thought, well, the price action really wasn't much to raise a red flag on, but when I saw the VIX and how it popped up out of this range when the price really wasn't doing a whole lot, this, guys, in hindsight, of course, is perfectly 2020, but at the time, we didn't know what to make of it other than this is unusual. Well, that was kind of an early indicator to the fact that last week everything kind of changed and was turned upside down on its head. So again, just kind of going back to the people that did see this last week, when you see price action acting normal, but you see the VIX popping up out of a range with volume, people are buying insurance. For whatever reason, they felt a little bit of uncertainty coming into the market. So let me go now to the spiders, SPY. A couple things of interest here. Here's that inside day. And then this was the State of the Union. And then going into the end of the week, I don't typically like to look for fundamental reasons, but this market was so overbought. We talked about how overbought it was on Bollinger Bands, on stochastics, on RSI. And I said, markets can remain overbought for longer than traders can remain solvent if they're trying to go the opposite way. So that's not always the best indicator to use, overbought, oversold. However, I did say this market was due for some sort of a shower and a correction. And boy, did we get one. Personally, I just kind of think that the catalyst was the last straw of what's going on back in Washington with all the craziness. I think that spooked some people that wanted to take some profits. And so going into Friday, this was Friday's candle, closing on lows on, I think, 3 times normal volume. Pretty solid. But what's interesting to note is after Friday, and then of course today's follow through, which we'll examine even further, we basically, maybe you've heard us say that the market takes the stair steps up and takes the elevator down. Well, this is an elevator shaft down. I went back and counted, and this literally wiped out, I think, like 50 days of trading all the way back into these levels back here, back in early December. So 2 days in February takes us all the way back to early December prices. Now this is the closing price here. On the daily candle, there's the bottom, and then the closing price was about 263.93. However, I usually don't use my post market, but today I need to. There's the low. That wick right there was the low on the daily candle, and then we kind of closed up here. And then we're back down here even lower into the purple shaded area, which is the post market. Now, there's something of interest here. Let's go back to our daily chart. What did I draw? Well, we breached this breakout, which was prior resistance can become current support, and looks like the candle just traded right through that line, much like butter. got about halfway down to this area of interest. Same kind of a thing, okay? This is where price action back here met with selling 3 days in a row. We had a little minor pullback, and then our buy the dip market, we just plunged right back through. So once again, here's another example of prior resistance could become future support. So what is this level right here? Let me pull my chart out so I can see it. You know, roughly about 259-ish, we're going to say. Okay, well, let's go back to our aftermarket and look at this. That line transposed and came all the way down 259-ish right here. We actually tagged this line in aftermarket. So just because the market closed, guys, don't think that the selling abated. This is really, really crazy, and I have not seen this type of action in a long time. And I want to transition by saying I really, really hope that you guys were okay out there today, because these are the kind of days that blow up people's accounts. And I just hope it didn't happen to anybody here. Buy the dip works ad nauseum, month after month, year after year, until it stops working. And the worst thing you can do is just keep jumping in and buying the dip and rolling over and selling for a loss and buying the dip. This is a really tough day, guys. And if you had a bad day, shake it off. It got a lot of people, I'm sure, because we were so conditioned to be continually buying the dip. But this early warning system on Friday, this early warning candle, I'll transition into the trade of the week. The trade of the week this week is cash sitting on your hands. The concept of cash can be a position. And Jesse Livermore, one of the greatest traders ever, in his book, Reminiscence of a Stock Operator, alluded to that fact. He said, I can honestly say that over my years of trading, most of my money was made by sitting, meaning recognizing that the conditions are not right, and you're probably better off just being patient and putting your capital along the side and not putting it to risk. So that was the reason for the call this week for the trade of the week to go to cash. And I'm just going to go out and say it. I think it was a great call. Looking at what happened today, I think it probably saved a lot of people some aggravation if they had tried to catch some sort of a long today. So there's that. Look at this. This is crazy. All right, here's the VIX. We looked at that earlier. We blasted up and we closed around 44 here, regular market. Look at what happened after market. We went as high as 64. Dang. I mean this purple shaded section is absolute panic in the VIX after hours. So just because the bell rang at 4 o'clock, you guys, doesn't mean we're out of the woods by any means. There was a lot more damage that was done after hours in the VIX and in the spiders. Let's take a look at the Qs and how they're doing versus where they closed. A lot of bing, come on. There we go. Okay, so that yellow line is pretty much the low of the day in the daily market, which is corresponding there, but we're much lower. We're now at 157.03, so we're actually down here. I'll mark it up at these levels. So there's continued damage being done after hours, guys, and there's a lot of charts that are just absolutely broken. And once we see this, it's going to take a few days for things to reset, build a base, find some support, and that doesn't mean you don't have to trade, that you have to sit on your hands. But what I want to say next is something that Andy and I preached all the time back in the day when we had a lot more of these type of volatility environments. If you're normally trading 500 shares of something, well, maybe in an environment like this, you consider trading 100 or 200 at the most, because you are getting massive movements across the board. And the volatility makes it really hard to keep your tight management risk intact if you're using your full size. So again, if you're somebody who trades 500 shares in certain stocks, well, in an environment like this, you probably shouldn't be using that size. You should be using a really small size, because that's what you can adjust to. The volatility is there. We can't control that, but we can control our share size, and that helps also mitigate risk when we're wrong. So a lot of damage was done. The market needed it, quite honestly, and I just hope that a lot of people survive today, not getting too stubborn, buying the dip. We've got an ebook that Jamie will talk about as we get closer, but and I know Jamie's going to talk about this too, but just one more thing before I pass it back to him. And the spiders last week, as we were noticing some of the kicking up in the VIX and the purchasing of of protection and insurance. You know, these days back here, the Monday and the Tuesday and the Wednesday and the Thursday, if you guys were paying attention and you have Holly, you probably noticed that she was out of sorts. She had the flu. She had very low trade count. She had very low strategy count. She tried to go long. She tried to go short. There really wasn't much profit that was exuded last week through the AI. And again, as we talk to AI being a canary in the coal mine and watching and the success rate or the failure rate of what the AI is doing, that too was kind of, in hindsight, a little bit of a tip-off that things were not as they were. You know, during the test drive week back here, it was all longs, all day, all week, and the AI was, you know, printing money. But then we got to these candles, and the AI started to not know quite what to do and sat on their hands a lot. And so again, I feel like that was also kind of a precursor to letting us know the winds could be ready to change. In addition to what the VIX also did, popping out of its range last Monday where that arrow was indicated. And we talked about that last Monday. So crazy day, yes, for sure. These are the days you don't want to jump in front of the knife and catch it. If you are going to try and jump in front of the knife and catch it, you better look left and have a really good reason at that level for doing so. And I would recommend doing so on 30% of your normal size, because when you're wrong, you're really wrong in these markets when they're this volatile. So I believe that's it. Nothing else to add, really.
Things that are happening that very seldomly happen. These types of events are very few and far between, especially when you have the volume accompanying the down move and the VIX doing what it did. I mean, that's when you know, well, things are getting real here.
Let's add one more thing before I pass it back. This is really going to suck. My favorite 3-day bounce swing trade has been working so well, but this thing is absolutely going to get destroyed in 3 days when I start running back testing on it, because today we had all the perfect scenarios for these downtrodden, oversold bounces. Look, a lot of duplicates in here, but if I go down the line, pretty much all of these, they were all false signals, okay? They were all early in the day when the market was strong. Jamie's going to show you about how we did fill the gap and had a little bit of movement to the upside, but once we filled that gap, that was a iron curtain. And by the way, again, I just keep thinking of new things to say. What we had today was typically my horseshoe down alert. This is exactly what the markets did today, okay? Horseshoe down alerts are designed to find stocks, and you know, the ETFs and daily charts are fractal as well. They'll do the same thing. But gosh, why are my charts so slow? There we go. So here is our, I'm going to turn off the aftermarket real quick just so we can get a better view. Okay, there's our gap down, ladies and gentlemen, and here's 45 minutes to an hour of trading up, and then we close the gap, and that is where the wall of sellers jumped in today. So when we have a situation where a stock gaps down, comes in and tries to close the gap, but then rolls back over to fresh new lows, I'm going to mark up that level right there. That is what the horseshoe down alert is looking for. And when we have momentum, it will follow through if we have continued momentum. So these were all the alerts I had, stock by stock, doing the same type of thing, gapping down and rolling over to lows. Of course, the bullish side, the gap up, 0. I had 0 in here today. And then lastly, just because I didn't want to forget, one more time around the horn, S&P's, SPY, the ETF, down obviously, 4% today on 4.28 relative volume. Look at the volume bar here. This was no just weak attempt at a sell-off. This was unmitigated pounding of the bid, get me out volume. The Qs, I believe, did almost 4 or 5. The Qs did 3.79 regular volume. The diamonds, the Dow, did 5.8 times regular normal relative volume. So I don't think this is over by any means, and it's going to take a few more days to figure out where we go from here. So yeah, heat wave. Let me see if yeah, I'll go ahead and drop those horseshoe alerts in the chat window while Jamie starts talking. So those that wanted them, I'll drop them in the chat window. So with that said, heavy downside volume today. More after hours carnage. We got more to go, guys, and I'm not at all feeling bad about calling cash for the trade of the week, because I think that was the right move. All right, Jamie. Back to you.
Here. All right, let me flip it. Okay, so everybody should have eyes back on my screen here.
Yep.
And so, I was just noticing one of the questions that came through from a user asking if we can go through and how we would have seen this move on the volume scans and hopefully in order to take advantage of it. And of course, I wish there was a simple answer where we go, okay, so you take A plus B and you add them together and then you get an answer and then that's what you do. Of course, if it were that easy, I mean, well, we just know it's not like that. It's about soaking up the atmosphere on a day-to-day basis and then figuring out what we might do if certain things line up, okay? And I'll get into that from a very rudimentary standpoint here in just a second. But first off, I wanted to point out some things, and these are going to kind of coincide with what Steve was showing, especially on that first little up move on the SPY, where the gap filled, flattened out, and then we headed back down lower. So first off, I want to show everybody what my compare count readings were this morning. Now, the interesting thing here is that we had kind of the opposite effect going on here. We look at the big caps, and these windows are looking for accelerated buying with extremely high volume. According to what is normal. Of course, that's a high volume time anyway, so we really have to jack the volume levels up, but that's what it's looking for. What could the institutions possibly be doing and leaving footprints behind? And what we saw after the first 15 minutes over here on the big caps, 4 billion plus market cap, 5.4 billion plus market cap, we saw a decent upside bias to the tune of 54%. Now, what did we see over here but on the stocks between 2 and 4 billion and below 2 billion? Quite a dramatic opposite over here. So after the first 15 minutes, I'm sitting here kind of scratching my head going, well, this is not something that I see very often, if ever. Such drastic differences between the 4 billion and lower and the 4 billion and higher. Now, of course, taking into consideration 15 minutes after the open, and of course, I've got my post market on here too. Let me just get rid of that just to free up a little. All right, so here we are back in the regular session. So here we are, we're getting CC readings right about here is the 15-minute mark, okay? So 5, 10, 15 minutes into the market, we're getting semi-bullish buying on the big caps in the opening 15 minutes. Now, of course, as Steve shows you, as soon as we popped up here and closed that gap, then we drop below the high. Now, we see this happening. Okay, we get the readings here. We're like, look, the compare counts telling us the future. The market's moving up. We got about, what, 5, 10, 15, 20, 25, 30, almost an hour of up move there. Now, at the same time, what's happening with Holly? And of course, we're going to jump around here and talk about what Holly did and kind of fold it into what we were seeing here. Now, Holly, first trade, not quite 30 minutes into the open. These three trades came out pretty close to one another. We had the Man H, we had CAR, and we had Intel. Now, of course, also, Intel's popping up on Holly. I'm thinking to myself, wow, when's the last time we saw Intel come through here, or Microsoft, or one of the big stalwarts? And I'm like, well, okay, small caps might be, maybe the IWM is going to take a header today, but the big caps might be strong. We're getting this upward move here. We're seeing Intel come out. And then, of course, Intel, pretty much, I remember seeing the signal, look back, it was down a little bit, and then before I could even hit a few keystrokes, whoosh, it was up 20, 30 cents already. So, of course, in the first 30 minutes or so, after Holly starts issuing trades, kind of thinking to myself, well, can't keep a good market down. We're starting to see things, turn up here. Holly's green, operating at 3, operating on at 100% on 3 or 4 long trades that have been spit out. But then once we get back up to this level, we get this little flattening out. And of course, you're thinking to yourself, well, is this just the pause that refreshes? My compare counts were showing some beefy numbers there, but we did have the opposite effect on the smaller caps. So eventually, not too long after that, what starts happening to Holly? She keeps adding long positions, but guess what? Her little uptrend becomes broken here, and we can just take note of whether it's risk on mode today from the chart or risk off mode. I mean, she got up quick, nice. Everybody's thinking, hey, this could be a banner day. But very quickly, look how quickly we retraced all of that. And this is all happening, not immediately, but it happened rather quickly today after we started taking these little downturns here. And once again, it doesn't matter if you're risk on, almost 244, risk off, approaching the $2 level, but then a quick degradation. So the bottom line is this, and this is one of my favorite lines. If you didn't take those long cookies, that bounce money when it was being passed around today, there might not have even been crumbs on the left, left over in the plate when it came back around. Matter of fact, there was anti-crumbs, or you might have even been down. So as Steve alluded to earlier, hopefully a lot of people didn't get too chopped up in this move. Of course, if we're utilizing risk management, stop losses, sticking to those. I mean, today was a day that easily could have left many of us with a few bloody noses, but we lived to fight another day. So after the first hour or so, Holly went into her other mode that we affectionately call the canary in the coal mine, meaning, well, I was doing good, I'm not doing so good anymore. This should be a cue. So, depending on how active you were in the markets, these things could have been giving you a decent guiding light. Now, of course, as the user was asking earlier, how could we have known that this was going to happen? Well, you can't. You can't. Now, what would have been a good indicator that things might be heading lower? Well, sometimes we just have to be patient, as Steve said, and we have to wait for things to occur. Now, of course, the wait was kind of long if we were waiting for the SPY to break down out of its range today. But look, eventually it did happen right here at this point right here, which is 9:20 my time. So about 20 minutes after lunch is when we first got the first peck below, but nothing big. We can see down here volume is still not as big as what we see over here. But then we get over here, gee, that's right about when lunchtime was over in New York, right? 1 o'clock Eastern. So this is when we had the break, and we had it with significant volume. So if I'm sitting here and I'm watching the SPY in this relatively tight little range break down, I mean, this looks like the setups that I look for when I'm shorting a stock, but it's the entire market, or the resemblance of the market in the SPY ETF. So when we break down with the volume here, it was off to the races here. We did try to pop back up to a little, entry stop out there, but nope, not to be had, and the volume was kicking all day. Now, one more thing to take note of: when the market opened 30 minutes in, 40 minutes in, an hour in, these relative volume numbers here never took their foot off the gas. Ones, twos, threes, and higher, and only accelerated as the day progressed. So this was the big tell right here to me when things could get really nasty. And of course, all of us are sitting here today as the open and the run up occurred, and we come back down here, and I'm thinking, well, we could come down to here, or if things get really nasty, typically what always happens is we establish our lines, and more times than not, whether this is a single stock and we're trying to gauge our stop out or whatever, they just keep taking it further and further, and it blew really past everybody's expectations, including mine today. And now we're having the further selling after the market. So there were some indicators that could have gotten us prepared for the larger part of the move, but in my opinion, we have to wait for something to happen. When we're up here, how are we going to know that all this was going to happen? You don't. You just have to sit there and wait for a setup to occur, or maybe you've already been seeing setups similar in other equities, which brings up another good point here. And I do want to talk about Holly's trades, but I want to bring this little guy over real quick because of all the time I've been watching this list here over the past couple of years, most of the time it's the pack leaders top list that I'm showing. Matter of fact, even before we started taking these little chop downs here, I'm thinking to myself, or I made the comments on Twitter and in some of the webinars, hey, we might be having a little down day here, but the pack leaders list is still packed. More stocks than you see here, and even having to scroll a while to get all the stocks up there. But how quickly things change. So if the market is an equation and you have one side and the other side, stocks hitting all-time highs, well, then the inverse of that would be stocks hitting all-time lows. So this is the most packed I've seen this list in a very long time. We'll use some of the examples on here to point out, hey, what's the inverse of a good breakout trade to the upside? Well, you just flip the pattern. This, I'm also getting a little ahead of myself, because this is also what we talk about in the ebook that we published not too long ago, about, well, when the buy the dip stops working, how are you going to be mentally prepared in order to just make that pivot and go, okay, well, assuming I'm comfortable with short selling, all I have to do is flip my charts. Instead of buy the dip, it's going to be sell the rip, so forth and so on. So before we get into that, let's go ahead and talk about Holly and what she did today. Now, of course, we know she only showed up with one short position that didn't fire. 1, 2, 3, 4, 5, 6 longs. Now, I know probably what's going through some of your heads out there is, well, the market had a huge down day, and shouldn't this thing just be, killing it, going short? Well, yes and no. The AI has to have some data to work with. Oops. So, of course, this is what she's been working with. I mean, what have we been doing here? Boom, boom, boom. And of course, after today, after Friday, she had a little bit of information. She'll have more information today, but it's really on a day-by-day basis. So, any of you guys that have your ear to the ground trying to figure out, well, what does this mean? Well, all it really means in the long term is the market went down. Now, is the bull market over? You're going to have some people out there saying, yes, this is the beginning of the end, and you're going to have an equal amount of people out there going, hey, it's just a healthy pullback. We got to have a healthy pullback before we can go higher. So what's going to happen? Are we going to move lower? Are we going to move higher tomorrow? We'll find out. But before we ever start seeing Holly being a short-selling dominant machine, we're going to have a little bit of a trend to develop in not so vertical of a fashion, right? So having said that, a lot of long trades spit out today. The first 3 or 4 trades, at one point in time, she was up in all of them, right? So let's take a look at some of these. And of course, unlike most days where we see nice gains on the risk off, and then there's more left on the table on risk on, not today for obvious reasons. The only one, and this was the anomaly, not the norm, was this little BW, which got spit out right at lunchtime, 9 o'clock Pacific Standard Time. Once again, a nice little breakout, and it goes, right? And I'm sure a lot of people that took this trade when it was here, like, I'm taking my money, man. The market's falling out of bed. I was one of those people. But guess what? It headed higher. There's always going to be these stocks, but definitely the anomaly and not the norm. That's why it's the only one showing a little bit more on risk on than what Holly took in her risk off mode. Now, Intel, really nice little setup on this guy today, because the blue line right here indicates Holly's entry price. The blue arrow indicates the time factor. But of course, I really like this one when it came out for a couple of different factors. Number one, it was Intel. Bullish trend change. Comes into the session with 66% chance of going the way we think it's going to go. Now, what I really liked about this one was the fact that in addition to Holly bringing it to the table with a very nice statistical probability on our side, at this point right here, it's also exhibiting a nice tight little range break. I like those patterns a lot. Some people do, some people don't. They happen to be one of my favorite patterns because of the simplicity involved. We've got a nice stop loss clearly defined here for us, and what happens? very quickly we get a nice rise in Intel. And of course, once we get into the money, well, it's all about risk management. What do you feel like doing? Now, of course, in the moment, when Holly's getting out of this trade right here, which I got to say she handled this one pretty well. Sometimes she'll get out with a timed hold if it expires. But let's see here. On this one, she decided to get out early on a profit save. Looks like that was the right call, Holly, because we can see the shaded area corresponds with the risk off time. And then, of course, as soon as she exited, down, 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 and down. Now, of course, the SPY was having its little spasm there as well. So, regardless of who you are, what got you into the trade today, I mean, that was the herd mentality today. Hey, if I'm long something and I see the market doing what it's doing, chances are you were going to peel out of that thing anyway. And of course, 16 cents here would have been a 47-cent loser. 25 cents on Intel would have turned into a loser. And Man H, which was one of the biggest winners, also a nice little runner off the open. So the money was there, but man, if you didn't take it, it was a quick return to zero. Not even so quick here. I mean, you had plenty of time to go, do I want to get out? Do I want to get out? Do I want to get out? I mean, lots of time here. And of course, a lot of the down moves in the stocks, the biggest down moves are going to correspond with that, that break in the SPY today. So considering that Holly came to the party with all long on her table and made only long trades, can't say I'm real disappointed with that, because there was cash there. We have to use a little bit of, chart reading skills and what the overall market is doing. So the fact that there was even long money to be taken today in this first little area today, can't be too displeased with Holly. And, once we get some kind of pattern emerging to the downside, that day will come when we see Holly with more short trades than long trades, and more short strategies than long strategies.
I think going forward in the near term here, if we have another day like today where we open up gap down and we trade up and go to flat, that really should be a significant point to get concerned about. That worked really well on the way up on the buy the dip. We'd have gap down days, and we'd close the gap and we'd stutter for a second, then we'd shoot through the gap and be positive for the day. But not today. We hit that gap and went sideways for a good half an hour, and those are serious levels of pivots, support and resistance, closing the gap. So now that we've kind of broke on the other side of the mountain here on the daily chart, I think gap downs really should be suspect. If you want to ride a scalp up to closing of the gap, kind of today was a good example of what happens when we gap down in a seller's market. It's kind of an early fake out, and then we roll back over to lows. And that's the horseshoe rollover setup that I did put that cloud link into the chat window for an A window for people who want to monitor stocks that are doing that. But again, going forward, filling the gap from a gap down, once we hit that gap, that might be it for the day. We'll see.
Right. And, of course, we have to just kind of sit there a while and let it show us that it's gonna, not breach that point. But good point, Steve. And I just dropped the pack losers into the chat area. Someone was asking for it. So yeah, a lot more pack than he usually is. And if we keep getting this type of activity, only expect to see more and more on here. But this brings up a pretty good time to kind of tell everybody what we've put out recently, and I also want to show people when we released this ebook. And what I'm going to do, I guess there's nothing wrong with dropping the URL to the ebook right into the chat area, eh, Steve?
Sure, no, nothing wrong
all
at
right.
all.
I'm going to go ahead and drop this in. I'll just call it the ebook. This was put together by myself, Andy, Steve, and Sean. And, as we were seeing this type of activity in the SPY, just because we've been around the block a while and we know that, hey, it's all great, but eventually the tide turns. It's cyclical. It's not anybody looking into their magic 8-ball or using their secret strategy or knowing what the street's going to do. It's just simply a cycle. These cycles repeat themselves. So it's never a matter of if the markets are going to turn. It's just simply a matter of when. So it is a bit timely that we just released this book, and one of our good buddy Sean, who's now one of the team members at Trade Ideas, posted this screenshot that he created of when we released the ebook. And the ebook is talking about 5 ways to win in a post buy the dip market. All right. What do we do when the buy the dip stops working? Now, we don't know
Like
that
today.
it's, yeah, we know it stopped working today. Is it going to be a permanent fixture? Is that over for good? Maybe, maybe not. But when the time comes when we're really in a bear market, how do we react? And of course, no time like the present to start preparing. Now, of course, there's a little bit of luck involved here, going, hey, we're going to put out this book for you guys that shows you how to get by in a bear market, and then 1 day, 2 day, and within 2 days of releasing that book, we're starting to have this. All right.
We had been working on it about 3 or 4 weeks, about 3 weeks prior, in all fairness, but the release seems to have had good timing.
Yeah, yeah. So basically, it's not rocket science. It's basically just learning to invert your patterns, and of course, you have to be comfortable with short selling. So for those of you who attend on the regulars, one of my favorites is the range break. It's a simple pattern. It's easy to identify. A lot of the times, we can get the range break on the intraday to give us a nice cozy entry with some decent risks, and then we'll also see that pattern being mimicked on another time frame on the daily. All right. And of course, a lot of the great traders out there say, when you see your pattern lining up on multiple time frames, that's a good thing. So here we have pack losers. Now I've prepared a couple of these that are showing good chart patterns. This little guy right here is the perfect pattern. Now keep in mind it is a low dollar stock, so it's not really the stock price that we're focusing on here. It's just getting used to the pattern. Now, most of the time, we see this pattern inverted. Hey, the stock's been consolidating at its lifetime high, and now it's breaking out. Well, this is just exactly the opposite. Now, keep in mind, I've got my daily chart fully compressed. Looking to the left here, there is no apparent support. This level here was just recently breached on Friday, right? Friday today. So, of course, that's what my line is from on Friday. I think this is the one that I tweeted out. And of course, we had the penetration of this line. And once this line is broken, we're looking to the left. Instead of no resistance, there is no support. There is nothing to look back to the left here and go, hey, okay, well, it comes down to these levels. It might take a breather. So this is what I like to call into the abyss. When they're up
Basement.
top, yep, they're in blue sky. Nope, this is the exact opposite. We're not in the stratosphere. We're in Mariana's Trench going down, down, down. That's a long way down. All right, where it stops, nobody knows. So, once again, these are showing up more and more and more. Now, keeping in mind, these are stocks at all-time lows. So the ones at all-time highs most likely aren't the ones that are going to be doing this. But the more of these animals show up in the forest, the more the other side of the equation of the market as a whole is starting to balance out and starting to get more tug from the downside, right? So it would only go, we could, use this logic. The more of these guys show up, well, the more we might have the big guys coming down, right? Kind of like when the market is up and all these big cap stocks are pulling us up, that's when we were showing the trend change reversal. Instead of those guys forming new bottoms, they were hugging their lines and being pulled up by the great magnet that is the S&P. All right. So this is just an observation. I could be wrong, but I don't think I am. The more that we see these guys showing up, that's telling us something. All right. So this is going to be a great list to try to find these guys that are breaking down. And of course, our normal windows, right? Instead of my turbo up family no resistance, we even had a couple of guys trying to go higher today before the whirlpool stopped everybody, right? GOOS, it had high hopes of breaking out of that range, but those hopes were stomped on, okay? Now this little window is starting to get a lot more active where we can see these guys. Not something I'd really have an interest in, but we can see nonetheless these lower extremes are being broken, all right? these little areas are being penetrated, and if no volume is there to get them back above, then these guys will pretty much just keep on bleeding down over time. And the more we progress, the more we should see more of these guys coming out of the woodwork. What I've also noticed is there's a lot of relatively new issues, right? CCT, I don't know if this is our chart glitch that we've been trying to work through or not, but I think I'm compressed all the way up. But I have noticed there's a whole lot of initial offerings that have only been alive for 1 month, 2 months, 3 months, that never even got to enjoy. You know, as soon as they popped their high, they got range bound, and now even some of those guys are starting to break down, and these issues aren't even that old. So as the market, if the market does continue with this type of activity, we should have plenty of windows that are going to point us out to some good candidates.
All right. Well, you have 2 requests. One for the first one, of course, the pack losers, and also you whetted somebody's interest in the Turbo Up family.
Sure.
I don't have the PDF in here, so we might have to drop these in here individually.
That's okay. Fortunately, we made that quite easy to do. So I'll drop both of these guys in here. Turbo Up, no resist.
Into the chat window.
And of course, Turbo Down, no support. Okay. All right, so we got both of those guys in there now. We got the pack losers, Turbo Up, Turbo Down. Now also, and of course, people might want to modify this one a little further. This one's looking at stocks that are capitalized at 4 billion or higher. So I'm gonna go ahead and throw this in because a lot of the times we don't know until the market itself breaks. You know, do we feel compelled to go short? Is that what the winds are telling us? Now, if we did go back, we don't have the time to do that today. If you go back and look at the break in the SPY, and then go back and look at the correlation at the things this guy was spitting out, I mean, there were so many that there's no way you'd ever have time to even look and hit them all unless you were doing some type of automation. But a lot of the times we don't have the luxury of a nice clean break in the SPY, something this big to give us a tell. All right, but you know, once the market broke, everything else pretty much followed suit. So just keep in mind, as a trader, we want high quality information streams on our desktop. Now, that doesn't mean that we're going to hit every trade that comes along. It's high quality for what reason? Well, in this case, not only are these guys having no resistance and no support, but the volume at that point in time is extremely high, right? So when you see a market break like this, and who knows when we're going to see another, I mean, there was a lot of time to react once this thing cracked. So you might have had a gazillion stocks coming through here, but once again, just like any ticker window, we don't want to paint ourselves into a corner and have too few things coming through here, but we want to take care of the volume right off the bat, so we know the volume's there, and then we just look at the nice picture on the screen, which is the chart, to let us know, yes, the timing on this chart is good, or I'm late on this one, therefore I'm passing. The signal is too far past, or the stock's too far past the signal, or hey, this one's perfect and the risk is in place, I'm going to take me some of that one. And of course, let's see, let's just check the time here. Yeah, I was gonna dig in here, but we're approaching the 5-minute mark, so there's just not enough time to get in there and do it. Depending on what the markets do tomorrow and the next day, there may be plenty of time to address this either in Steve's webinar or Andy's come Thursday. But in any case, wow, I can't believe the hour's up already, Steve. Anything to add?
Just a reiteration, as long as the volatility is through the roof, which it is, you should be downsizing 2 or 3 times your normal share size until things start to calm down. You can still participate with movement, but if you're going to do your normal share size, you're going to give yourself a lot of panic attacks and probably get stopped out from the volatility. So the only way to combat that is to get small, like Steve
Yes.
Martin used to say. Get really, really small.
That might be a good name for a strategy in the future. Okay.
That's all I
Yeah.
got.
And you know what? I mean, you hit the nail on the head there, Steve. I mean, VIX, I mean, it's been so sleepy for a long time. Started looking like it was the dry ships chart. But man, when you see this thing perking up like this, it definitely does mean something. So, you know,
That
take
doesn't even tell
heed.
the after hours story still.
I know. Let's go ahead and take one more peek before we bring Scott in at the after hours here. So is it still the same? It's just right up there and kind of basing out.
It's much higher than where it closed.
After hours move was
Twitter,
bigger than the
Twitter
bigger
is
than
all
the.
Twitter is all aflutter right now. Everybody is just, oh my God, jaw drop at what's happening in the after hours market, especially in the VIX and the triple leveraged TVIX and the other ones.
Oh yeah,
So
oh yeah.
it's people are in awe right now looking at this stuff.
And we get well, of course, you know, I have to chime in here about the newly emerged cryptocurrency markets. It's been Armageddon there for the past 3 or 4 days, and now the market is following suit. So it's just kind of like markets in general. No matter if it's crypto or the old school equity markets, it's that time. So there
Press
will be
change,
there will
rearrange.
be opportunity tomorrow, but mind your P's and Q's. Keep it small, like Steve said, and by all means, stick to those stop losses.
Yep.
All right, Scott, if you're ready, we're ready for you.
All right, sounds good. So, Jamie and Steve already mentioned the ebook that we put out there. The easiest way to get it is just to go to trade-ideas.com/ebook. It's a shortcut. Actually, it's all lowercase instead of E capital B. I'll fix that on the next iteration of the slide, but it's a shortcut to go to the other link that Jamie put in the chat, and it is timely. You know, we're having a little bit of a bloodbath out there, and if you want to have some good ideas, some strategies to keep in your back pocket for if the market decides to stay in a downtrend, download it and read it and keep it handy. We also have a podcast, and we had a new episode out on Friday, good one. So go ahead and make sure that you're subscribing to the podcast by searching for Trade Ideas Podcast in the application you use to listen to podcasts, whether that's the podcast app from iOS or Stitcher or any of the multitude of podcatchers. Just go ahead and search for Trade Ideas Podcast, subscribe to it, download some back issues and listen to those. And we got a new one coming out this Friday too, so do that. We have an important announcement coming up in 2 weeks. February 15th, we have a price change, and all the prices are going up 20% across the board. This does not affect existing subscriptions, so if you already have an active subscription when this goes into effect, you retain your existing rates as you renew. But any new subscriptions starting after the 15th will have the new 2018 rates. Keep that in mind. We do have a promotional code to give out today, and we'll be reminding everyone about the price jump all the way up until February 15th when it happens. But don't sleep on it, because once it happens, we're not reverting, and it's a great time to lock in the existing rates. We've been adding a lot of features in the last several years, and we're overdue for this, so keep that in mind. And now, as promised, we also have a discount code. It's good this month. It's from the code for this webinar is Holly is Love, all caps, and that's for Valentine's. So so when you use Holly is Love to purchase your new Trade Idea subscription or to use for an upgrade, saves 15% off the first month or year. You can use that for either standard or premium. So go ahead and take advantage of that. If you have any questions, just shoot us an email, info@trade-ideas.com, or you can email Steve or Jamie directly at the emails on your screen. If you open the handouts panel on your GoToWebinar interface and click the download link on that PDF, you can grab yourself a PDF with some slides from this presentation. And like we mentioned, we do have that price jump coming in February, so keep that in mind. And thanks, everyone. We'll have a recording up later on tonight or tomorrow morning. Thank you, Jamie. Thank you, Steve.
All right. Thank you.
Yeah.
Thank you, gentlemen. Thanks, everybody, for popping in, and we'll see you tomorrow.
I'll see you tomorrow for sure. Bye-bye.
Bye-bye.